All right, so in this video here, I'm going to talk about a concept called fading an entry. So when you're trading in the markets, there's things called entry triggers or catalysts. So most people, the question is, if you're new to trading, is like, when do you buy something? When do you sell something? And obviously, if you're in this space, you're learning about trading, there's a lot of different ways to answer that question. The way that we view it before I start this video is through price levels. So when we're trading momentum, and again, this isn't specific to fundamental analysis, so don't take what I'm going to say in this video and think that you can apply it to fundamental driven ideas. It's not the same. When we're trading momentum, we look at price levels and really price levels, and that's it. Okay. So when we're looking at ideas to get into, whether we're buying or selling something, typically when you break a price level is when, again, you get into a position. So for example, we're looking at Meta here on this particular chart. You have the S&P and you have the NASDAQ here as well. Okay. So whether it's S&P or NASDAQ, if you look at this setup here, all of these charts have these white lines on them. These white lines are previous high day and previous low day. There's a thought process and approach to using the ranges, just like even the options have previous low day here. This is previous low day. Okay. So typically, if price were to break below this on the NASDAQ, that's a pretty bearish signal to get short. Okay. Same thing with this. And if it broke below previous low day on Meta, this is a bearish signal to get short. But sometimes as you get good at trading and you understand how to use levels and read price action and order flow, you can do something called fading the entry. Okay, fading the entry means that you're not waiting for a level to break. Okay, or you're not waiting for like a 5-step checklist to be like, okay, if this does this, it does this, and it does this. Now, again, if you're listening to this video, you're watching this video, when you're new to trading, there's a big emphasis on managing your trade plan and sticking to your trade plan. And again, that's important. But as you start to do this for 5 years, 10 years, I've been doing for 2 decades, you get to a point where you've seen price action over and over. You get to a point where you understand different concepts, which I'm going to explain in this video. And you get to a point where you just start to fade some of the entries. Okay. Because you've seen all that you needed to see to tell you, again, in this instance, that price is probably going to go lower. Okay. So instead of waiting for the entry trigger, you begin to put a position on that allows you to take a short term entry and then add to the position as it goes in your favor. Okay. That's fading an entry. Okay. So that being said, I've just basically set the dinner table. Let's talk about why I want to fade this meta, why the S&P is here, why the NASDAQ is here. Then I'll walk through the trade that I put on. Okay. So first and foremost, you have to understand the way we look at markets, I guess is unique. And I guess it's unique because of the fact that if you're watching this video and you've read books or people talk about trading patterns and bull flags and bear flags and head and shoulders stuff, that's the only way that you trade. Okay. We look at the market through multiple frameworks. The framework we're talking about on this channel is momentum trading. And momentum trading, the way we do it, is purely based around price levels, previous high day and previous low day, and candle progression. Okay, that's it. There's nothing else to it. There's no analysis of meta, et cetera, et cetera. And we publish this every week in the report. If you're not familiar, if you're new to this channel, we publish this report every single week. You can literally get a free copy for not free for 30 days. You can try it. If you don't like it, we'll give you your money back. But the point is we publish this report every week. There's a section here. You can go to Meta and look at the notes. Okay. And I'll explain to you on Meta here what we're looking at. This isn't a sell zone. Okay. Now, when we say sell zone, there's analysis we use to determine that there's nothing that I want to do that tells me I want to be a buyer of Meta. That there's, again, based on the way we look at price analysis and technical analysis, that this entire section of price action up here is going to create a scenario where, again, like you're seeing, where price action gets in, see this 100 level here? It gets into the zone, it's choppy, kind of makes a high, it's choppy, tries to rally, it's choppy. And what you're getting is not a new trend. Okay. You're getting to an area where the trend starts to change. This is called distribution, where everybody's buying pullbacks and they get to a point where they're not sure the trend's going to continue. Okay. So it starts to be like, okay, look, I'm going to break out and fail. And this trend slowly starts to reverse and correct. Okay. So this is what you're getting at these highs. So when I look at Meta this morning or this afternoon and I'm fading the entry, it's because we came into this week understanding, okay, that this price area from, yes, it's a big price area, 5.7. This whole area is an area where I don't want to be taking long trades. Okay. The only thing I want to do is come in and look to start shorting this particular name. Okay. So that's number one. Number two is this. Normally, the way we do this, and again, if you haven't heard of entry triggers, this is a big thing in trading. Um, if you're watching this video and you've been, again, I've seen, look, maybe you're blunt in the video with you guys for a second. I've seen every video on YouTube I've been doing for 2 decades if you're watching this. I know people talk about level 2 and time and sales and all this other nonsense. The reason these guys do it for you guys is to create content. They don't do it to actually educate you guys. So the reason I'm going to bring it up here is most of you guys will look at time and sales or level 2 to tell you, when do I need to get into a trade? Okay, as if you reading time and sales on Microsoft, which trades millions of shares every day with mutual funds and ETFs, is going to tell you it's ready to sell. Is just, again, something I think is a joke. Okay, to be real blunt with you guys. So when I look at this and I know that we're in a sell zone, whether I look at the 15-minute or 60-minute chart or 4 hour, it doesn't make a difference to me. The way that I view this is I know that there's selling pressure on this stock. Okay. And yeah, we use something called previous high day and previous low day, which I'll explain in a second. Again, it's, to be clear, it takes more than one video to explain it to you. But normally I would wait for this level previous low day to break because this gives me an entry trigger. Okay, so we use triggers to get into trades, and typically they're technical triggers. And again, I'm going to say it again in this video because I've been around traders for a decade, and people take something and they conflate it to something else. This isn't the same thing I use when we fundamentally analyze stocks. Okay, so when we're trading momentum, you need entry triggers to help you time your entry. Okay, normally we'd wait for this to break to get into the trade, but because we're fading the entry, I'm not waiting for that to break. I'm doing something saying, hey, look, I'm going to assume that this selling pressure is going to resume. I'm going to assume that this is going to break down today. So I'm going to put a position on. Now, this is entirely different from a lot of you that are new to trading. Okay, now some of you, if there's a spectrum of traders, you have a spectrum here that traders are really risky. You have a spectrum here where you have traders that are not risky. Okay, where they need like 10 different things to tell them to get into a trade. Then you have the trader over here who's like, you know what, who cares? I'm just going to gamble, which is typically Wall Street Bets and Reddit, and they put on these trades. Okay, it's best in my view to be somewhere in the middle of the spectrum. Okay, pretty much on anything in life. Okay, so today when I'm looking at this position and I'm saying, hey, look, I want to short this, I'm going to fade the entry. Okay, and I did. I'm going to pull it up here. We're going to go through it. Let's see if I can pull up the active trader. I don't know why this is running so slow, but give me a second here. Okay, so there we go. Okay, so we're going to pull it up here and I'll explain it to you. So I have an entry of 3 contracts. I don't know if you can see it. Maybe you can pause and zoom in at 201. Okay, so again, this is fading the entry. Now, normally I should wait. We call it confirmation, right? Confirmation, it's not just for Catholics. Sometimes you can fade entries like this and put a position on. Okay, so that's what we did in this position. I'm not going to sit there and, again, assume, or sorry, and wait for this to break down. I'm using a few different tools to understand that, hey, look, more than likely the odds are this is going to break lower. Now, what are those tools? This is the next part of the video. I'm going to explain it to you. Okay, if you haven't watched the rest of the videos on our channel, it'll help you to do it. But we view the S&P and the NASDAQ as indicators. Okay, and again, to reiterate, I've been doing this for 2 decades. I've seen all the indicators in the world out there that people make up. There's nothing, again, that beats price action and understanding candles. Okay, the S&P and NASDAQ were very, very bullish this morning. Okay, there was some news that came out with earnings on Taiwan Semiconductor. It gapped up. It held. This is previous high a day here. This is previous low a day. Previous high a day. Previous low a day. Okay, price action rallied off of this level, and it's failing again. Okay, there's something in the world of trading. This isn't made up or this isn't theory. You know, people love to, especially the YouTube gurus out here that you guys all see, like to make up theories about things and make them as their own. An ODR is an outside day reversal. It's not made up. This is a very simple concept that's been taught for decades. And the concept is this: when price gets above yesterday's trading range, it's trying to find value higher. Okay. When it comes back to the range high and fails, that's a bearish outside day reversal. Okay, this in itself is an indication of price action. That's how you read price. Okay, it's telling you that it tried to break out today and it failed. So when you look at this, and I look at S&P and Nasdaq, they're probably going to, and they have already started, create outside day reversals that are bearish. Okay. Now the third parlor trick is this: because Meta is a high beta equity. Now again, this matters. Some of you guys that are watching these videos, the way I'm talking in this video might throw you off because you're used to, again, the generic bullshit that's on YouTube. Okay. Because Meta is a high beta equity, and because Meta is so correlated towards the S&P and Nasdaq, and because it's held in mutual funds, every time the S&P and Nasdaq rallies, a lot of the stocks in our momentum monitor are going to rally or fail with it. Okay? So when you talk about beta, it's a higher correlation of these names towards the S&P and Nasdaq. Now there's a lot of names in the report. Again, if you go to the swing monitor, there's stocks like Dollar General that's not going to rally or um, sell off with the Nasdaq. All right, EOG is an oil and gas stock. It's not going to sit there and rally and sell off with the Nasdaq. But these names do. Okay, so when we look at this, and I'm paying attention to this as an indicator, and I'm watching this, okay, I can fade the entry because I can assume that these things are having outside day reversal. I can see these 60-minute candles are very bearish. So as a trader, why would I wait and wait and wait and wait for this to finally keep selling to say, hey, look, now I want to add risk to this? You wouldn't. Okay. This is called fading an entry. Now, again, to be clear with you guys watching this video, I don't suggest this for those of you because, again, I just worked with so many traders over my career and I know how people's minds think. I don't suggest this for trading futures. Okay. I don't suggest this to trade if you're trading a lot of contracts. Okay. So, from a risk perspective, whenever I fade an entry, I never size the position to my full risk. Okay. I've talked about this channel before, something called VAR. People call it risk management. In the real world, it's called value at risk. So if you have a VAR model, again, it sounds pretty complex, but it's not. Let's say, for example, your max risk is $1,000 per position. Okay. And if you do our SAT, which is, again, small account trading model, which literally I created back in 2015, some people follow it, some people they don't, and they break it and then they have issues. If you follow this risk model based on your account size, let's say, for example, you have a $5,000 portfolio and you're trading options with it, and the max P&L or max position you're going to use is $500. Okay, if you're going to fade an entry, in my worldview, and again, I just did it on this trade, you don't want to size up to your max risk when you fade an entry because there's always a chance you can be wrong. So typically, what I'll do is I piece into a position. Okay, like on this particular trade, I only have 3 contracts on. Now, if this starts to break down the last hour of trading, which we're about 15 minutes from, into the 3 to 4 p.m. hour, the power hour, if this starts to break down and we start to break 573, then I might come in and say, hey, look, this is breaking down. This is breaking down. You know, this is all the momentum pressure is going to start breaking. So I'll add into this position. Okay. So this is really important because you can take this concept of fading an entry and entirely screw it up because you add too much risk to the position. Okay. The final point I'm going to leave you with is this, because inevitably over the years, this has always come up with traders. And I'm going to say it to be blunt in this video. A lot of you guys that are new to trading are hyper obsessed with trading the small time frames. Okay. Every trader's got to go through this, unfortunately, until you realize that you just need to become less uptight when you trade the markets and stop worrying about losing $30 or $40 to trade. Now, if that bothers you, again, this is a wrong business for you. And I've said it before 1,000 times and it bothers people, but it is. When I look at this position here and I look at this, okay, and watch this, I'm not sitting here watching my P&L like, oh, I'm down $10, I'm down $50, okay? And I'm not obsessed with this idea. And this plagues a lot of amateur traders, okay? I've seen it. Again, for those of you that are new to this channel, I just have an education company. I've taught thousands of traders around the world, okay? I'm not obsessed with watching every tick. I'm like, okay, I got to buy it right here. And as soon as I get in, I'm like, okay, it's going to move my favor. And it's moving and it's moving. I don't care about that. Okay. For multiple reasons. Number one, when you trade options, and again, not everything I do is options trading, but when you trade options, you have peace of mind because the cost is fixed. And if you're going to watch an options position move 20 or $30 on you and panic out of it, you're doing one or two things wrong. Number one, you're trading too much size, which again, I've seen 90% of you that are amateurs do because you don't have a risk model that you stick to. Or number two, you're trading with money that you just can't afford to lose. And that usually leads to a thought process of, I've got to short it exactly or buy it exactly at the time it's going to move. And if it doesn't move my direction instantly, I've got to find a different trading system. It's the most ridiculous thing I've seen. And you have to get over it as an amateur trader. If I'm giving advice in this video, which I am, that's one of the biggest pieces of advice I'll give you. Okay. So this is a short video on fading entries. Again, to be clear with this, there's a rhyme and reason to how we do this. And again, it's not that simple. I know a lot of traders, you guys want simple, but again, coming into this week, Meta was on the list to be bearish. And this is why in the first place, I'm even watching it to short. The second thing is, aside from analyzing Meta by itself, I'm paying attention to the S&P and the Nasdaq because the S&P and Nasdaq both tell me when I look at this that these are bearish. And again, the tail wags the dog. If this fails, this is going to fail as well. Now, again, I don't need these to fail to get Microsoft to drop because this by itself has been pretty bearish all day in the past 2 weeks, but it helps that this is also bearish. Okay. So that's the video here. If you guys have questions, comments, you guys can head over to the website. If you guys don't know, we publish that report each and every Sunday. You can subscribe to it. The comments are turned up on this YouTube channel because I just don't have the time to answer comments. And again, to be real blunt in the video, answering troll comments by people who aren't serious is a waste of my time. If you guys have questions and you're trying to learn about this and you want to engage, you guys can subscribe to the report. We push it out every single week. There's two options for subscription. There's a monthly subscription. There's a chat room you can use. There's a video that goes out on Sunday as well as that report I just showed you. If you want yearly access to it, you can just go to the About page. There's yearly access. It also gives you access to the options lectures and market structure as well. Okay, so you make that decision. But every question about this type of stuff is answered on that blog versus the YouTube comment section. Okay, so best of luck in your trading. Hopefully this helped you guys. Again, if it doesn't make sense, rewatch the video a few times, test this on simulation, and see if it works for you. Again, it's worked for me in my career because, again, it's allowed me to get into positions where I don't have to wait. And if I'm right on the assumption based on the analysis, I get a better entry. Okay. The final point is this: please be smart. When you put these positions on, consider the concept of small risk. And as it continues to go in your favor, add into the risk. The most detrimental thing you can do with fading an entry is getting too aggressive because, again, sometimes you are wrong and you don't want to be wrong with too much money at loss. Okay. So that's it for me. Thanks for watching. I'll see you guys in the next video.